Here are the three things that you need to know right now. We have to start with the global sell-off that's going on. Here you have your global map, and you see a lot of red on the screen from Hong Kong, off 3.8%, Tokyo 2.5%, the selling continuing over in Europe, down more than 1% across the board for the major European averages. And all of this following on the selling that we saw last week for the major averages here in the U.S. Well, that's not right, that we saw over the 5-day period, or we saw a negative on the week. That's what the bottom line is. It was the fifth straight weekly decline for the averages here in the United States, and that's the first time we've seen that going back to June of 2011. And guess what, folks? The selling continues here this morning for the U.S. futures. Dow futures off by almost 400 points, indicating a drop of 1.2% at the open here this morning. And you've got the other futures, S&P futures off 1.5%, Nasdaq futures down the most of the three. It is they are off by about 2% here this morning, as we see just a lot of negative sentiment going on. We're going to talk more about that in a moment, but I got to look cross asset a little bit here this morning. And the US dollar index, which is now pulling back a little bit, but we had been seeing a lot of people looking for safety. And one of the places they were seeing it was in the U.S. dollar, but that looks to be rolling over a little bit here this morning. Gold futures also rolling over a little bit, interestingly, even though we had been seeing some buying into gold over the past week or so. Now that is no longer the case. So where are people looking for safety? Not exactly clear this morning. Oil is down by 2.5% here as well this morning. And Bitcoin, which we're going to get more to in just a moment, is also seeing a lot of selling pressure this morning. So, guys, this is really again, an ugly setup on what has already been an ugly period of time. Let's go into the Nasdaq 100 here as well to look at large cap tech, because, of course, that's where we have seen the most selling pressure likely. The bottom numbers here are the pre-market trades, and you see really a lot of selling here. Again, Amazon already at a 52-week low, set to fall another 3.25%. Tesla set to fall 4%. Alphabet set to fall 2%. Apple set to fall 2%. Whew.
You know where you could find safety, Julie? Under a blankie with an egg sandwich. I think that's the only place where you could find safety right now. But look, I've been getting notes all morning long. We could be seeing more forced selling. A lot of folks in the market, at least here, are getting concerned about a next wave of selling, maybe today, maybe later in the week as we get more Fed speak. But that is the major concern on Wall Street. Higher rate, fears of higher rates, fears of higher inflation, fears of corporate earnings slowdown. So again, you're really getting the sense of an increasingly nervous market.
And increasingly as well on the consumer front, exactly how different households, individuals are adjusting some of their own spending right now. You take a look at the XLY pre-market here, that one of the biggest sector decliners that we're checking in here on the Wi-Fi Interactive as well right now, down going into today's trading session. Yeah,
it was down 1.25% on Friday, down another 2% here this morning, along with tech, one of the big losers here. Just one more thing that I forgot to mention that Saz reminded me of when he mentioned what's going on with rates here this morning. When you see what's happening with rates, are people looking for safety in the Treasury market? It depends on where. We are seeing a little bit of buying in the 5-year note, because there you're seeing the yield go down. Remember, when people buy, prices go up, yields go down. But we did see the 5-year yield the highest in September of 2008 earlier. So elsewhere on the yield curve, though, we've still got selling and yields going higher.